Hello everyone. Yes, we are live here on our webinar platform and also on our YouTube channel. So welcome to our webinar. My name is Olena Gryniuk. I'm the CE Director at the SME Banking Club, and from this year also founder and director at WOA.digital. And this is the platform where we promote and develop the digitalization of receivable finance and build an active community of experts eager to drive change in receivable finance. So welcome to the community as well. Today we speak about e-invoicing developments, regulation updates, and recent use cases. And my guests today are Ellen Cortvriend, partner at PwC Belgium and Global E-invoicing and e-reporting lead, and Katalin Kauzli, co-founder and business development director at Partner Hub, which is an e-invoicing solution provider from Hungary. Ellen and Katalin, welcome.
Thank you.
Hello.
Yeah, before we get to our topic, let me very shortly mention the organizational information. So we plan our webinar for 45-50 minutes. We start from the presentations, and right after the presentations, we will have a Q&A session, and we will be ready to answer your questions. So please type your questions in the chat at once when you have them during the presentations, and we will be able to answer them in the second part of the webinar during the Q&A session. And we are recording this webinar, so right after we finish, you will receive the link to the video and the presentations. All right, so let's go to our topic. We all know that e-invoicing regulations are coming. By 2027, e-invoicing will be mandatory in the largest number of the European Union countries and outside European Union as well. So let us discuss the regulatory landscape, and after that, what all that means for the financial industry. So I'm handing over a microphone to you, Ellen and Katalin. And Ellen, let's start from the regulatory part.
Perfect. So hello everyone. Thanks for joining in on this webinar, and thank you, Olena, for the kind invitation. So I will indeed first highlight a bit what is the regulatory landscape around invoicing, focusing on Europe, but also focusing on some of the global developments, the why behind these developments are happening globally, and then also how they impact businesses nowadays. And then, of course, we will have Katalin, who will zoom into the specific impact that all of this will have for the financial industry specifically. So maybe starting off with some background. So Olena, you mentioned there is a very strong increase in the regulatory landscape when it comes to e-invoicing obligations, and that is very much so, as you can also see being highlighted here on this slide, where you can see that nowadays the number of e-requirements which are categorized as mandatory e-invoicing obligations. Simply said, you are no longer able to send the invoice in the way you want to send it towards your buyer, but you are forced to either use government platforms for doing that, or you need to have the government perform specific validations, clearance processes before you actually can send your invoice towards your buyer. Or in some cases, there are real-time reporting obligations, meaning your invoice information also needs to be submitted post-issuance of the invoice towards the tax authority, so that they can, of course, also make use of that data. Typically, this is happening in near real time, so within a few days usually, and again, in a structured format, in a predefined format, again, given the authorities a lot of flexibility to work with that information. And then under the e-requirements, we also categorize a third type of requirement that we see popping up more and more, the so-called on-request e-audit requirements, meaning you need to be able to extract, to present your accounting information, which goes a bit beyond the pure invoice information, also in a predefined format, on the request of the authorities, either because they ask for it, for instance, during an audit, or even periodically, where in some cases it is even already replacing some of the existing compliance obligations. If you look at the impact that these requirements nowadays have, you can see that nowadays already more than 80 countries have one or a combination of these systems being implemented. And I think, and that's precisely why we're having this discussion today, the 60 figure on the slide is even more impactful, where you can see that there are already more than 60 new obligations currently being announced by governments worldwide. So overall, a very big impact for businesses and a lot to take into account for the future. Why is this happening? You will not be surprised that a lot of this is revenue driven. There's the so-called VAT gap, the VAT gap being the difference between what governments should collect in terms of VAT revenue versus what they actually collect. And that amount is huge, which means that for a government, it is very beneficial to foresee systems that allow them to collect in a better way the VAT that they should already owe, rather than imposing, for instance, additional taxes to businesses. There are, of course, also a lot of other revenue-driven impacts. Think about the COVID-19 expenditure recovery, inflation, the high energy cost, environmental pressure, which all, I would say, emphasize that need for governments to have sufficient focus on revenue. On the other hand, you also have the process in itself, the focus of tax authorities that is changing, meaning that also within the government, there is a so-called digital transformation process going on. So they're moving away from conducting audits based on aggregated information, based on information that they really gather behind the facts, even years later, following the transactions, to a more real-time way of auditing taxpayers in their countries. This is what is being referred to as the OECD Tax Administration 3.0, which is very much focused on that. Then, of course, and we hear it every day, everywhere nowadays, the use of advanced technologies, think about Gen AI, that will, of course, be possible for governments to use on top of the massive amounts of data that they are collecting nowadays, which is, of course, I would say, giving them really a head start when using that new types of technologies to make better use of the data that they're collecting. And then the third element, and I think that's a very important one, and we'll come to that when we're discussing about the specific use cases. Katalin will focus on that. It's also about creating a win-win for governments and for businesses. Because especially if you look at e-invoicing obligations, it's not just a matter of imposing an additional compliance obligation towards businesses. It's also something, if done right, of course, by a business, that will allow them to rethink their current processes and think about efficiency gain, in the overall process. And I think the evidence is there that it indeed works. For governments. I've named here on the slide 2 examples. You have Mexico, where e-invoicing and e-accounting was already implemented many, many years ago. Well, Mexico was able to reduce their overall VAT gap with more than 50%. Also, if you look at the more recent example, Italy, that was, I would say, one of the front runners in Europe when implementing e-invoicing requirements. They have also reduced their VAT gap immensely. So here it's mentioned 10 to 11% of the overall VAT gap in only a very few years after the implementation of mandatory e-invoicing. So it works. It gives businesses and authorities the possibility to optimize their process, which means that, of course, and we'll come to that on this slide, it is something that is very popular, being implemented by many governments all around the globe nowadays. So what you're currently seeing is a high-level EU and non-EU watch list, so an overview of those requirements that are coming your way in the near future. And today we will not have the time to look into each and every country obligation, but I just want to pick out some obligations just to make sure or to make you aware that this is not happening only in a few countries, but is really happening all around the globe nowadays. So if we look at some of the, I would say, the recent requirements that are being implemented or that are soon to be implemented, I think Romania is a good example, where only yesterday the B2B e-invoicing kicked off. Also earlier this year, not only mandatory e-invoicing was implemented by Romania, but also a real-time reporting obligation was implemented on top of that. To showcase that it's not because a country has decided to go for mandatory e-invoicing that will limit them to implement some of the other requirements that I referred to in the introduction. I think here also Romania is a very good example because they first implemented the so-called SAFTI requirement, the standard audit file for tax, whereas now they have also implemented real-time reporting and mandatory B2B e-invoicing on top of that. The way that the Romanian mandate will work is on the basis of a centralized government system that will be responsible for the actual delivery of the invoice documents towards the buyers. Another example of a requirement that will be implemented very shortly, a bit further away though, is Malaysia. So Malaysia will also implement B2B, B2G e-invoicing for the largest taxpayers as from August of this year. Why is this so relevant? Because it's clear that Malaysia can be, I would say, the front runner of what will happen around e-invoicing for the Asia-Pacific region for the next couple of years. So we see that with the introduction of B2B e-invoicing in Malaysia, also Singapore, for instance, has taken its first steps into the introduction of the B2B e-invoicing mandate. Not a nationwide mandate though, so not per se the same as what Malaysia did, but really focusing on the newly registered GST taxpayers in their country. If you look a bit further down the line, you can see that there are a lot of big economies in Europe being mentioned. You have Poland that will move into mandatory B2B e-invoicing. Initially, they plan to do so already for July of this year as well. They have postponed the introduction of their requirements a bit to 2026, as you can see. So as from February or April, depending on which rollout wave you're in, also their B2B e-invoicing will become mandatory. And the same will happen in France, also with a bit of a delay, because initially also France was intending to implement their B2B e-invoicing mandate this year. They have postponed this as well to September 2026. Maybe a last country to highlight before I move into the European overall developments, or maybe two, if I may. Two countries that are relevant to mention are Germany and Belgium. So Germany will move into mandatory e-invoicing as well. They will do so in a phased manner, focusing first on the mandatory receipts of e-invoicing, meaning that as from January 2025, if you're a company established in Germany and you're receiving a structured electronic invoice that is interoperable with the so-called European norm, you are no longer able to refuse to receive that invoice document in that format. Only afterwards, Germany will also implement it as a mandatory thing on the sending side in a waved approach, meaning that then also the senders of invoices will be obliged to start sending electronic invoices in structured formats. And then the last one, Belgium, I wanted to mention because it's, of course, a country close to my heart. So Belgium will also implement B2B e-invoicing. They will do so as from January 2026 in a big bang approach. So not based on the size of the company, for instance, not distinguishing between AP or AR. They will implement it big bang for all businesses in Belgium as from Jan 26, and the system they will use to implement it is Peppol. Now, zooming out a bit to what is Europe's response towards all of these trends and all of these requirements happening. Well, of course, you heard me refer to the fact that there are things like safety, there are things like e-invoicing, real-time reporting. Within the e-invoicing mandates, you also see a lot of differences, clearance-based systems, distribution-based systems, and so on and so forth, interoperability system. So there is a lot of variety, not a lot of standardization happening in the European requirements. And also the European Commission realized that that, of course, is putting a lot of burden on businesses. So that is one of the reasons why they started the so-called ViDA initiative, so VAT in the digital age, which is basically their initiative to modernize some of the existing VAT rules, VAT compliance obligations for the European markets. So ViDA is a package of legislation, which basically consists of three main topics. So you have the digital reporting requirements, very much the topic of today, e-invoicing, real-time reporting. You have the platform economy. And then you also have an aspect around the single VAT registration that will allow businesses or reduce the need to have multiple VAT registrations for those businesses that are indeed selling to consumers all across the EU. It's important to understand that this is a package of legislation that also needs to be implemented, and be approved as a package by all EU member states as a way to modernize the current VAT rules. What is now being proposed under this ViDA package specifically related to e-invoicing and real-time reporting? Well, it's basically that e-invoicing, where it is now an option for member states to implement it, that e-invoicing should really become the default option, which is a mandatory process in any case for transactions between two EU member states. But also here, the member states will have the flexibility to implement it also as a mandatory element for the domestic transactions. Why are they implementing or do they want to implement e-invoicing as the default option? Because they want to be able to use the e-invoicing data as the basis for a real-time reporting requirement, a digital reporting requirement, to replace the current aggregated way of reporting again. That is part of the EC sales listing, in some countries also the EC purchase listing. So they want to really make use of the invoicing data for doing so. When are they planning to implement this requirement? Well, according to the draft legislation, they would like to implement it as from July 2030, with the possibility for the countries that have already a system in place to only converge into the new EU model by 2035. So that is what is currently on the table. We were hoping to bring during this webinar the fact that it has been approved on EU level. However, during the ECOFIN meeting that was held end of June, the ViDA proposal was not approved by all EU member states because there was one member state, being Estonia, who was against one of the elements out of the ViDA package. However, it's important to say that on the DRR front, so on the digital reporting requirements and e-invoicing, all member states were aligned, were positive about the proposed amendments. So the discussions will now continue mainly on that other aspect. It will be transferred to the new presidency, which will be Hungary, to continue the discussions between the member states. But no big changes are expected to the DRR-related part, knowing that all member states were already in agreement with that side of things. So important to also keep track of this one, because it will definitely impact the way that the e-invoicing landscape in Europe will look like in the future. If we now look at, okay, what is the impact that all of this has to your traditional VAT compliance process as a business? Well, you see, if you compare, that's what is mentioned on top of the slide, a traditional VAT compliance process, it typically starts with a VAT invoice that is being sent out of your ERP system, out of a bolt-on system, think about procurement systems that you're using, to create that invoice. It will be based on master transactional information that you again have available in your ERP solution or in bolt-on solutions. After that, after the invoicing process has taken place, you will extract the data again from your ERP, from bolt-on solutions. You will cleanse, you will transform that information, and you will include it as part of your standard VAT returns, other related returns. You will perform some reconciliation, some analytics, and you will put all of that as part of your VAT or legal archives. Years later, when there are VAT audits being conducted, that will be your source of truth, the information that you indeed have in your VAT legal archive, but where you still had the possibility to cleanse, to transform that information before it is being submitted towards the tax authorities. If you compare, however, this situation with the situation where there is real-time reporting being obliged by the member state, well, then, of course, you will see that the accuracy of your master and transactional information becomes much, much, much more important. Because, first of all, you need to be able to rely on that master data to say, well, is this transaction in scope, not in scope of the e-invoicing obligation? But you will also see that you will use that information that needs to be right as from the start to indeed invoice your transactions over, for instance, a government-run system, if I'm making the link with the distribution-based systems that I refer to. It also means that the data that you will use in order to perform your standard VAT and related returns, that will come from the tax authority system. So your tax authority system will indeed become the source of truth for all the information that will be part of the submitted VAT returns afterwards. It means that the focus is shifting from cleansing and transforming the information before submission of the VAT return to really reconciling afterwards between what is now coming out of my system as my standard VAT return versus the information that I've already submitted in real time towards the government. So that's why I mentioned at the bottom, there is the need to have your tax data right from the start. You need to be very reliable, let's say, as a business, on the information that you have as part of your system. And the position you're showing in real time towards government. Because also there we see a clear trend for governments to start already the pre-filling of your VAT return, for instance, on the basis of the information which they have already obtained through invoicing, through real-time reporting. Which means that, their focus during audit is also on the differences that are then popping up with what you submit in your overall VAT return afterwards. Maybe a short note to end before I hand it over to Katalin to discuss about some practical use cases for the financial industry specifically. I think hearing all of this, hearing the number of regulatory requirements that are coming your way in the future, it seems that for many businesses this is really changing also very drastically the approach they're taking towards these e-requirements in the future. Meaning that where for a very long time it was possible to be reactive when a certain regulatory requirement popped up, to find at that point in time an appropriate solution, typically very decentralized, very reactive, a bit behind the facts, just trying to comply with the regulation. Based on the number of requirements that is coming up for the next couple of years, you've seen the timeline, this is no longer a feasible option, which means that businesses are focusing more and more on having a centralized, proactive monitoring function in place to make sure that they're not surprised by any of these requirements, which are business critical requirements. It's not just a compliance obligation. This is really affecting a broad range of stakeholders within the company. It can affect your operational readiness in a certain country if you're no longer able to send out your invoice to collect the cash linked to that invoice in that country, which means that the approach they're taking is much more centralized with either global, regional solutions that can really help them also optimize their current processes, rethink their current processes to really make it something that is future-proof. And that is also creating, as I referred to in the beginning, really that win-win situation for businesses as well. So maybe with that, Katalin, I think I explained a bit around the regulatory environment. So I will now hand it over to you for the next part of the session.
Yeah, thank you very much. Olena, can you click to my...
Yes, of course. Yeah, thank you very much, Ellen, for such informative presentations. I do invite our webinar guests, our participants, to type your questions in the chat, both to Ellen and now you will hear Katalin's presentations, that we will be able to answer them afterwards. Thank you, and Katalin, please do continue.
Yes, thank you. So my name is Katalin Kauzli. I am a co-founder of Partner Hub, and today I will talk a little bit about how e-invoicing adds value to the digital factoring processes, bringing some statistics and real-life examples that show that the availability of data increases and motivates, the digital financing. Also, I will bring a case study from Hungary for embedded finance, how an integrated customer journey looks like between an online invoicing service provider and a digital factoring company, and how the digital factoring process can be digitalized and in an end-to-end way. And last but least of all, how to start the value creation using invoice data, what are the data sources, and what are the first questions that you need to think about. So Partner Hub, just a very short introduction. We have an e-invoicing technology, and we like all the use cases where invoicing meets banking, meaning payments and financing. These use cases are particularly interesting because, as Ellen mentioned, e-invoicing and the introduction of mandatory e-invoicing will have a very beneficial consequence, namely the availability of standardized and structured invoice data. So you will have a data set for invoice data. You already have a data set for financing, and these data sets can be merged, and these will help banks and financial service providers to make their processes much more efficient. So the availability of the invoice data will bring a decrease in service costs. There are studies that show that just by digitalizing processes, the service costs can be decreased by 30 to 80%. Obviously, if you have the e-invoicing mandates and the tax authorities are also involved in the process for real-time data submission to tax authorities, then this will be definitely a help in invoice fraud. The decrease in service costs will result in the fact that smaller customers and smaller ticket sizes can be served profitably. And this obviously means that a larger potential customer pool will be available for financing. So it's basically new layers of customers coming into the revenue pool of financial service providers. And the revenue increase together with the decrease in service costs and risk costs will increase profitability. I brought a couple of examples from India. These examples will not be restricted to the access of invoice data, but there is a so-called account aggregator framework in India, which is a consent-based data sharing framework, and this was brought to life to basically help the availability of loans and credits to customers, not only business customers, but retail customers as well. But you can see the trends and the statistics, how the consent-based data sharing improved. You can see it in the first figures. You can see that in parallel, the value of loan disbursements tripled in the last 2 years, not only for business customers, but also for the retail customers here. However, this account aggregator framework also consists of digital tax data and digital invoice data as well, which will cause that the availability of further loans and credits in smaller sizes for SME customers who are the most underserved in this respect. So you can see that, as the data access grows and the availability of data grows, the credit volumes also grow. So this will obviously be the same for the availability of invoice data. I haven't found specific statistics for that, but you can see the trends very much. In India, there is another framework or thread or platform, which is an invoice marketplace platform called the TRES platform. These platforms also use the account aggregator framework, and you can also see the volumes increasing as the volumes of the data sharings increased in the account aggregator framework, that the volumes of the threads platforms also grew in line with the number of SME companies registered in this framework. Currently, this framework serves only 1% of the invoice finance market in India, but it shows already that the increase was very significant in 2022 and 2023. There was an interview with one of the participants of the financial companies in the Threads platform. The CEO of this company told that participating such a platform causes 5 to 7% for the financed amount of the MSME suppliers. You can imagine what it means for a small company to have the financing cost decreased by this amount. So this is a huge opportunity, I think, for both financial service providers, but also for MSME or SME companies to start using and utilizing the value lying in data and the value lying in invoice data. This is still the example from India. This is a case study that the account aggregator framework has published. You can see that these two lending companies, that one of the companies experienced an almost 30% increase in revenue after introducing the account aggregator framework. You can see that the cost of loan processing decreased to less than a fourth of the original amount of loan processing. You can see that for both companies, the fraud rates are zero after introducing the framework. you can see that for lending card, the operational efficiency increased with 38%. I really wanted to show you these numbers because, these are hard facts and existing case studies, and not only theories that, we think that this would happen or that would happen. These actually happened and have been published. This is another case study from Hungary. This is an SME company profile, which is served by the integrated use case of an online invoicing company and the digital factoring company, which I will show you later. However, you can see that this SME has approximately 500,000 euros revenues and less than 100,000 euros profit. So you can see that because of the availability of invoice data, smaller customers can also be served profitably. The factoring results, so after this product was introduced by the two participants of the integration, you can see that that there was a significant amount of factored invoices. You can see that the average value of the factored invoices is quite small. You can also see that the company experienced a 47-day decrease in the day sales outstanding, which is, it's more than 2 months for a small company like that. This means huge in terms of liquidity. Huge impact in terms of liquidity, and you can see that they saved approximately 4,000 euros only on the financing cost, which is almost 5% of their profit. So it's like a huge amount in terms of their profitability. So this is what can be achieved if you start using invoice data in your lending operation or invoice financing operations. How it can be done? This will be, as I mentioned, the case study from Hungary, the integration of an online invoicing solution and the digital factoring solution. It means that when you issue the invoice from the online invoicing solution, you will have the option to have your invoice financed. And why is it, or how it can be done in practice? So the customer journey looks like that. You start typing in the appropriate invoice details. So when you issue the invoice, obviously you need the customer name. You will need the due date and payment method, so the financial details and payment details for the invoice. You will also have the item and price data and the invoice amount for the invoice. And these are the basic invoice details that are necessary to initiate the invoice financing process. When you issue the invoice, there is a real-time risk assessment run by the factoring company. They use the supplier, customer data, payment terms, and the invoice amounts. And if the risk assessment is successful, the SME can have the money instantly, meaning within a day. But this is, I think, fairly good value proposition for a small company, that you issue the invoice and you can have the money within a day, basically. if you have this, or if you want to do something like this, then the question arises, okay, it's very nice, but how do I get access to invoice data? What do I need to do as a first step? I think the first step is really to start to map the available data sources in the specific countries, because at the moment, the countries have different schemes, slightly different schemes, and the availability of invoice data is there, but you need to exactly find out what is available and how it is available. So what consents are required, what are the source systems that you need to integrate with. And if you have this, then you need to think about also not only the technical side of the integration strategy, but also the business side and the customer journey side. So how you will build up your customer journey, who are the partners that you want to work with or need to work with to generate more volume for your lending operations. The data sources that are generally available, data can be embedded in the invoices. So if we have a hybrid invoice data format, then no integration is required. Customers just can simply upload or put their invoices in a file system, and then you can start retrieving the data from there. So that is one thing, and that is the easiest thing from a service provider's perspective. If you have data available from tax authorities or account aggregators, then you need to max out this opportunity, because this is kind of the easy way, because tax authorities and account aggregators are centralized data sources where the customers can give you some kind of consent, and then you would be able to work with the data available there, even if it's like not 100% data sources, it will be better than nothing. So you would definitely want to have a look at those data sources. And if you want to build an integrated customer journey, and you are also thinking about online invoicing service providers or ERP companies as the start of the financing processes, just as you saw in the previous examples, then you would need to think about with whom you would like to integrate, and what kind of business partnership you can do with those companies. I wanted to talk about this today. If you would like to dig deeper into the topic, then please reach out to Olena and to me, and we would be more than happy to get into the details.
Yeah, thank you very much, Katalin, for insightful presentation and the use cases, and letting all of us know and focus on the business usage of and seeing the business opportunities in the e-invoicing regulations and e-invoicing data. So let us start the Q&A session. We do have questions from our attendees, which I will read right away. So thank you for your active participation. We have first question from Brenda, which sounds the following: how are business approaching with caution the path of e-invoicing, considering the macroeconomic risks, such as changes in the political landscape this year and the next? And this actually, if I may add this question, because it connotates very much, Ellen, to your slide, to which I have a question regarding what actually defines the pace of the implementation of the mandatory e-invoicing country by country in the European Union, because we do see that smaller countries in the EU, like Hungary, for example, or even Serbia, which is outside the European Union, or Romania is implementing. So Hungary and Serbia implemented already. Romania is implementing this year the e-invoicing, and the bigger economies, which are France and Germany, are implementing kind of 2027, 2028. What actually this different, whether there's rather political thing or technical thing?
Yeah, well, two very fair questions. I think it's a bit of a combination of both. Indeed, political circumstances that impact, I would say, the overall readiness of governments to move into the direction of e-invoicing. And I think Brenda's question is a very fair question. We've seen a lot of delays, a lot of changes to initially announced requirements that are happening, making it super hard for businesses to indeed make sure that they are well prepared. That I would say, once a delay is being announced, that not all of the effort that has gone into the initial preparation to become ready with, for instance, the Polish requirements and the French requirements, that is all put aside, and that's the focus will be on something else. So it's indeed that constant maneuvering or balancing between an appropriate level of preparedness to make sure that if a government says at a certain point in time, which was what happened with Romania as well, they just went for it and implementing it, that you're indeed ready as a business, because the impact may be too high from an operational point of view, but also from a financial consequences point of view. If you look at the overall penalty regime that is being applied in case of non-compliance in Romania, it is really massive. So from that perspective, you as a business cannot risk missing that specific obligation. But of course, the political environment is not really helping. The delays are not really helping. And to your question, Olena, why do we see Germany, France, and other jurisdictions only moving more recently? Well, of course, the VAT gap is one of the big drivers. In Romania, for instance, they had the biggest gap in Europe. So that was one of the reasons why they simply went for it, because they needed to do something to address their VAT gap. But of course, it's not the only reason. I think the good thing, though, with I would say the fact that Germany, but also Belgium, are waiting a bit longer, is that they're already aligning to the maximum extent with that ViDA initiative. So it means that there's still some hope for standardization, for harmonization in Europe, because what these countries would like to avoid is that they implement something which is or will no longer be compliant with the European rules in a couple of years, and therefore all of their effort will be, I would say, put to waste, because they need to converge into that new EU model. So that I would say is a good thing of them waiting a bit longer.
Mm-hmm. Mm-hmm. Yes, and this actually very much impacts, I would say, this interoperability which we are dreaming about, right? So because these invoicing regulations right now are touching local level, meaning that the invoices issued to the local counterparties, to the internal counterparties, where it does not at the moment covers the foreign or counterparties, right? So only after each country implements it on the local level, then we can talk about this interoperability on the level between countries, so inside the European Union countries at least, right?
Yes, and I think it is very important for a business that when you start working, you already start using some kind of standards, and I think the EU standards and the global standards are there. The major IT providers or ERP providers all implement these standards. Unfortunately, the local standards are in line with the global standards or European standards, obviously with some localization. So you cannot make a big mistake if you start using the standardized, or the already existing standards, because they will be there.
Yeah.
So that is the way to go, I think, and that is the best approach with caution. So you cannot make a mistake there.
I fully agree. It already gives you a head start so that you can just focus on what is very country specific, which is basically the 80-20 rule, right? What is country specific is mostly only 20% of the full semantics, for instance, that are required. So it already gives you a head start and a certain level of preparation to make sure that you can indeed be compliant in each and every country that is implementing or imposing requirements to you in the future.
Yeah. We have a question from Maria, which is the following. So coming from a technology company that would be integrating with e-invoicing solutions, are there any list of government-approved e-invoicing software solutions per country?
I can take that one if you wish as well. And I would say it depends. Certain countries, and it depends on the type of mandate, the type of requirements that they put forward. In some cases, where their systems are relying on so-called accredited software providers, making the connection between senders and recipients of invoices and the government platform, then of course a government will make available a list of those certified software providers. But it's not that we have one global standardized list of all approved vendors available. It typically differentiates from country to country, and it also depends on the specific model that is being implemented by that country.
What we have seen actually here in the CE region, right, in several countries which implemented already, that's we have an e-invoicing platform operated by the government or tax authority that, let's say, and all the existing platforms which are used by businesses or ERP systems should be integrated, and making it possible to exchange the information in the structured format. So we have a question from Manuel: how the factor can assure that invoice that was dispersed after the assessment, it will be paid to the factor, right? How the debtor is notified to do it?
There are differences in the invoice finance regulations, and there are differences also in practices how factoring companies are approaching, this issue at the moment. I think this will not change as opposed to the current practice, just the way how it is done. So, for example, in Hungary, besides the invoice, you also need to issue like a delivery note or certificate of performance, which would be issued by the buyer anyway. So this would, in the case of a B2B invoice, so this would ensure that the buyer will actually pay your invoice. This can be also digitalized, and there are, mechanisms how to notify the parties of the financing transaction, but e-invoicing in itself will not solve all the problems. It will solve the data accessibility problem and the digitalization problem. Obviously, this is something that can be also helped if you have like a track record of a relationship between a buyer and the seller. You would be able to assess, together with the banking transaction data, so the payment data of the invoices, what is the probability that specific buyer will pay that invoice or not. So these are my answers to your questions. But invoicing is a very good thing, but not a holy grail. So it cannot solve all your problems.
All right. So to wrap up today's webinar, the notification, no change. So the notification will be defined by the process of digital invoice finance. I guess this is
as for now. Later on, it might change, but as of now, it will change overnight.
Let's get back, Katalin, to the business use cases, how invoice data can be used in invoice finance or in factoring. We do see some delay, I would say, with the implementation of e-invoicing, and I would like to ask you about the Hungary's example, because we do know that there is a delay between the implementation of e-invoicing and the data accessibility, and the moment when the data become accessible to the financial players. So how was in Hungarian example this time lag? And also, what would be your recommendations to existing or to the countries which are implementing the e-invoicing right now, for example, like Romania, or will be implementing it in the nearest 1-2 years, so that at the moment they don't see this, or they don't know how they will receive these sources or these accesses to the e-invoicing data. So how to build this expectation that it should be accessed, and that they should use it in their invoice finance processes, and actually how to do it in practice.
Yeah. So first of all, in Hungary, the real-time data submission obligation was introduced first in 2018. It was a phased implementation, and from 2020, all companies who issue invoices must report them real-time to the tax authority. And then, we have seen that these digital factoring solutions, which I mentioned with the Számlás.hu and the Bafactor use case, and we have also another use case for KNH Bank, who use the tax authority data. So they also came out with their solution after 4 years of the implementation of the scheme. So obviously, all the systems must be upgraded on the business side, but also financing companies need to understand the value lying in the invoice data and put into their development processes. So I think there will be definitely a time lag, but I would expect that this e-invoicing is becoming a more mainstream thing than it was in 2020. So I think the time lag will be shorter. You could see the Indian examples that there was a time lag there, but the increase will be really massive. So that is one thing. So I would expect the implementation time, so the decision time that is needed to define your strategy using invoice data, and then make a plan how you would do it, and then the implementation part actually. So that takes, depending on the size of the organization, I don't know, from 1 year to 2 years, 2.5 years, depending really how big the organization is. So that would be my best guess. And from the tax authority side, I would advise the tax authorities also have their data strategy, not for their own, but for the benefit of the whole economy. So if they implement or if they require data, then I would suggest that they also do it in line with the global standards, because then it will be easy for all other data users to think about their own use cases, how they can reuse the already existing data.
Mm-hmm. Yeah, thank you very much. Thank you very much, Katalin. Thank you very much, Ellen, for your contribution. Thank you very much, all the attendees, for staying to the very end and being active. So thank you very much, and see you next time in September already, because I think we all now go to some vacation break, and see you in September on the webinars, and on December on the WOA Awards. Thank you and goodbye.
Thanks all. Bye-bye.
Thank you. Bye.